Hello, and welcome to the first in our RKL webinar series, Coronavirus and its Impact on People, Process, and Profits. Before we start today's call, we would like to share a couple of housekeeping items. First, this webinar will be recorded and will be shared as soon as it's available via email. All materials that we're going to cover during today's call were emailed to you probably within the last hour, so please check your email. Additionally, all lines are muted and will remain muted during this webinar. If you have any problems, please use the chat feature in the webinar. Questions can be sent to info@rklcpa.com. 1 hour of CPE in the field of business law will be issued for participants on this call. To receive your CPE, participants must be connected to the session, both audio and presentation, for its entirety, and participants must answer all questions, elements of engagement throughout the call. At this time, I would like to turn the presentation over to Eric Wenger, who will introduce our team for today's webinar. Eric, the floor is yours.
Well, good morning. Thank you so much, everyone, for joining us. It's a pleasure to be with you here this morning in some unique circumstances, both in our country and probably each of us in our own respective homes. And I would say if all of you can just bear with us here, we are broadcasting live from our respective houses. So this is a little bit interesting, but I think the technology is going to do its work. And as probably many of you are experiencing as well, these are some unusual times. And so I'll tell you, in our house, we've got 3 teenagers. We have a 18, 16, and 14-year-old. Our oldest, Josh, is a senior in high school, and so he's looking at all this saying, what does this mean for my graduation? What's it mean for my AP exams? Just some questions in his senior year, class of 2020. Our daughter just got her driver's license last week, so she was expecting, newfound freedom, which has pretty well come to a screeching halt. And our youngest is just thrilled to not be at school. So that's sort of the state on the home front in our house. Today, you're going to hear from 3 of us, and I'll be leading off more from a tax perspective. Stephane Smith will be joining us midway through. She's an HR consultant, and she will be giving her perspective on a lot of issues that are just coming to the forefront in the midst of this last week or two. And Ryan Hurst, a partner in our business consulting group, will back clean up here and bring us home with some financing decisions. So let me see if I can get us moved forward on the slide deck, and we should be good to go. Okay, the outline for today, what are we going to talk about? Where are we headed? First of all, there has been a ton of regulations and legislation, 3 acts that are in process or have already passed. We're going to spend some time there. We're going to spend the most time talking about the second of those 3, which is the Families First Coronavirus Response Act, HR 6201. That's where we'll be spending a decent amount of time today. That's the concept, the act that introduced the concept of paid leave, paid sick time, etc. Stephanie will be talking with us about the COVID-19 in the workplace. What do you do when these various situations and questions arise? Also talking about unemployment. That's a topic that just a few weeks ago, very few people were even thinking or mindful of. And at this point, unemployment is in everybody's consideration. So, and we'll start off here. I just want to sort of frame out where we're at with these 3 acts that have been going through Congress. If we look back in time, the first one being this, if you think 2 weeks ago, what was going on in our country? This was just sort of coming onto the national radar as far as we need to do something. This is a crisis. It wasn't referred to as a pandemic at that time. But Congress acted, and you look at the dates there on the middle of the screen. The House passed a bill on March 4th. The Senate took it up on March 5th, and the President signed it on Friday, March 6th, exactly 2 weeks ago. And you look at those vote counts. I mean, how often do things happen that are voted that unanimously? So obviously a lot of bipartisan support with $8 billion going toward research and vaccines. Just a week later, we had HR 6201. Let me see if I can get to the next slide here. The Families First Act. And this one originated on a Friday. It got voted on last Saturday morning. There were technical corrections by the House on Monday. It went to the Senate on Wednesday. Trump signed it this past Wednesday, and on Thursday, April 2nd, it will be effective. We're going to spend time on that second act. I'm jumping ahead here because I want to talk about the third act, because this is a huge headline in what's going on right now in current events. And then we will come back to the second act. The third act is not yet law, but it is everywhere in the news right now. And so, as you've probably heard, things like, initially the way this was framed up earlier this week was that there would be about $1 trillion economic stimulus package, and that would be constituted of these various components, direct cash payments to individuals, small business loans, collateralized loans, guarantees, perhaps some money for the airline industry. And there was a belief that the Senate would be acting quickly on that. And I have to tell you, when we put this slide deck together, it has been an absolute moving target. And we'll talk about some of the specifics here momentarily, but this continues to move. What I want to talk about next, and I intentionally did not include a lot of detail here, simply because this is not yet law, but you need to know this stuff because it has sweeping implications for individuals and businesses across the U.S., pretty much across all industries. And so what I'd like to talk about here is that there are a variety of provisions in this Senate bill. It was put forward by Mitch McConnell, who is the Senate Majority Leader. It was just published last evening. And so one of the documents that you received from our email to you, participants, probably about 15 or 20 minutes ago, is a document that's called the Relief for Individuals, Families, and Businesses. And so I'm going to talk through that document. If you want some more details, I would tell you that's the place to go to reference this stuff in a little bit more detail, but obviously we don't have time to cover it in extensive detail today. The reason I bring this up is because you saw how quickly that legislation moved through both the House and Senate, the Act 1 and Act 2. This is Act 3, if you will, and Act 3, while it is being introduced by Republican leadership, and there's certainly room for amendments and changes to happen, I suspect what we're going to see is something that resembles this to a great degree. We'll see. I mean, anything can happen in the process, but it seems like a lot of the partisanship, I should say, has been sort of set aside in the interest of this national disaster, national emergency, and Congress is anxious and willing, and the president is as well, to bring relief. And so we're going to talk about the provisions of this Senate bill. The Senate is working on it this weekend. The House is currently not in session. The House is back next week. I suspect by early to mid next week, this will end up becoming law, or I should say some form of this. So let's just talk through what these various sections include. First one being this recovery check. And this is the one that you probably saw in the headlines. They're talking about $1,200 per adult in the U.S. that you would simply get a check in the mail from the U.S. Treasury. So a married couple would get $2,400 and an extra $500 for every child with no limitation in terms of number of children. There is an income limitation. So if your AGI in 2018 exceeded $75,000 as an individual or $150,000 for a joint married couple, then there's some phase outs that apply. And by the time your income exceeds $99,000 for a single individual or $198,000 for a married couple, this rebate goes away. So to give you an idea there, that's what's being talked about. There's direction in this act that the Secretary of the Treasury should expedite these payments as soon as possible. There's been various scenarios bantered around about whether that's April as well as May, or perhaps it's one single payment for the entire amount. But that's where that stands at the moment. Next up in the Senate bill is a delay of certain deadlines. And this is moving April 15th to July 15th for all purposes of tax deadlines. Interestingly, just within the last hour, Secretary Mnuchin, Treasury Secretary, announced the same thing. So when you think about his authority, he's coming at this from the administrative executive branch with oversight of the IRS. What we're seeing in this act was legislative. Either way, we have a change in filing deadline from April 15th until July 15th. And so for folks that are concerned about how am I going to get all my stuff taken care of and filed, that issue is now, at least at the federal level, taken off the table. Still begs a lot of questions on states, and that information is changing by the minute. The other part of 2102 is that delay from April till July in filing is allowing a postponement of any estimated quarterly taxes that would be due. And basically what this means is no taxpayer needs to pay estimates between now and October 15th. So the theme of this Senate bill, this $1 trillion bill that we're talking about at the moment, is bringing money back to companies, back to individuals, or allowing them to defer paying those amounts. And so that's here is an example of that, where estimates would be deferred until October. Then moving through these other sections, the special rules for retirement funds, what that means, similar to other disaster declarations, if you were to tap a 401k or an IRA and you're not of age to do so, there's typically a 10% penalty. That's waived in this instance. So if you need to tap money out of those retirement plans, you can do so without penalty. There is an income tax implication there, but that's actually being allowed to be spread over 3 years is what's proposed. So the income pickup would be spread over 3 years, and you do have the opportunity to recontribute the money back into your plan if you get through this situation and you're able to restore your cash position and put those dollars back into your account. The next 2104, this is sort of an odd, surprising thing to see here, just a minor item. If you do not itemize, they are now offering, under this act, $300 of a deduction for cash contributions to a 501c3. Similarly, 2105 references no limitation on charitable giving. Typically, that's 50% of your AGI. That's being proposed to go away and be unlimited. Let's switch over to the business provisions. Similar to what we just talked about on the individual side, estimates by any companies are able to be deferred until October 15th. I don't have in front of me at the moment, I haven't gotten to the level of detail to understand the implications for fiscal filers, but I believe what this is allowing to occur is any payments, any cash related to 2020 taxes or payments that would be due here in the near term, estimates-wise, are not needing to be funded until October 15th. 2202, delay of payment of employer payroll taxes. You may recall initially President Trump suggested that there be a waiver of any kind of employment taxes. That has not really taken hold in Congress. What has happened is employers are responsible to pay half of the self-employment taxes, the Social Security taxes. So this act is allowing employers to defer paying the employer share of payroll taxes. That 6.2% Social Security tax, as much as you continue to have employees that are working for you, and typically you would have to remit the employer share on a regular basis, the IRS is saying, just give us what you withheld from the employee, but your employer share you can defer, and you don't need to pay. The first half of it needs to be paid by December 31st of 2021. So think about that. We're talking about 21 months from now. The other half by December 31st of 2022. So there's no waiver of employment taxes, but there is certainly a significant delay being introduced. There's also some provisions that came out of the Tax Reform Act that started in 2018. A number of sort of taxpayer unfriendly provisions that are now being waived. And that would include things like limiting NOLs. The new rules say you can't carry back NOLs. You need to only carry them forward. Well, in an environment when companies are losing money, that's not much of a solace. And so this bill, this act, is suggesting that losses from 2018, 19, or 2020 can be carried back 5 years. So there may be some amended return opportunities to the extent that this becomes law. Also, some loss limitations that will no longer apply. And the business interest, you guys may be familiar with the 30% limitation. That's being increased to 50%, which is a good thing for taxpayers. It's taxpayer friendly to have that limit raised. What I had in here previously is at this point almost NA. As of this morning, it was good law. Now that the Treasury an hour ago said that the deadline is July 15th instead of April 15th, most of this is NA. However, I think it's relevant to suggest or to mention that the payment of taxes that are due related to 2019 taxes, those amounts are only deferred until July 15th. So as I understand it at this time, and this certainly could be subject to change, but I believe what we have here is quarterly estimates for 2020 do not need to be paid until October 15th, but taxes associated with 2019 taxable income are due July 15th. So that is something that I believe has been retained here. A lot of these questions at this point, given the Treasury's additional guidance, are going to be NA, and that's why we put this red text on here. So I'm just going to sort of buzz over these slides and take us back to, if you remember at the outset, I talked about the second act, and today we're going to spend more time on the second act. So now we're transitioning into, this is real law. This got passed just a few days ago. It was signed into law. So this is the law of the land. And again, it will be effective 15 days after enactment, which takes us to April 2nd. So this is what employers need to be aware of and the implications here. First, to talk about which employers are included. This is any employers with fewer than 500 employees. If you're a large employer that has more than 500 employees, this does not apply. Some companies would say that's a good thing. Some companies would say that's a bad thing, depending on your perspective. Regardless, it is not applicable for companies with fewer or with more than 500 employees. Small businesses have asked a lot of questions around this. Well, are we subject to this? What about small businesses with fewer than 50 employees? There is something written in this law that basically says the Secretary of Labor has the authority to issue regulations to exempt employers that have fewer than 50 employees from the paid leave provisions of this act if compliance would jeopardize the business as a viable concern. What that means right now is entirely unknown. So we're not in a position to be able to say what would cause that hardship, what would cause the business being in jeopardy of continuing. So, stand by for additional guidance on that from our Secretary of Labor. What is included in this second act? There's a number of components. Free testing for the coronavirus, food assistance, Medicaid benefits, expanded unemployment aid, and paid leave. And that's where we're going to go next, is talking about within this act, what's the deal with sick paid leave, family leave, et cetera. There's two main parts. The first part, let's talk about emergency paid sick leave. How do you become eligible as an employee, or from an employer mindset, who is eligible and who are we required to offer this paid sick leave? There's three criteria that have been adopted. And I should mention here, because of how fast this stuff has been moving, there were a lot of articles, a lot of press released last week based on the version that the House had passed. And you guys may recall that Nancy Pelosi and the Treasury Secretary Mnuchin worked together to negotiate that. It was brought to Congress. They had less than an hour to review it. It was voted about 12 something in the morning after midnight. And so there was some uncertainty about exactly what was in there. Then they proposed a technical corrections bill, which was actually passed by unanimous consent because the House was no longer in session. Those changes are noted here in red. So just be careful about which version of guidance you're reading, because there is certainly conflicting guidance out there. Back to emergency paid sick leave. What's our eligibility? Number one, quarantining order from the government or a doctor. Obviously, that is a qualifying event. Number two, having symptoms or being diagnosed is a qualifying event, or providing care for a family member who has been diagnosed, or for a child whose school or daycare has been closed due to coronavirus. The closure of schools is a very prevalent thing given our location here in Pennsylvania. I realize not everybody on the call here today is PA, but we'll look at it through that lens for now. When the governor's closed all the schools, if you have an employee who has a child who is out of school and therefore they need to be out of the office, that would qualify them for this sick leave. We gave you a chart that has the next several slides in one page that you'll be able to reference. It's a little bit tricky to see here in this PowerPoint, but what I want to do is just go across this chart on the top line and to give you an example. So say that the employment status is they're an employee, because this could also actually apply to self-employed individuals as well. If we have an employee who is themselves sick, not a family member, but for themselves, they are actually, meaning they have the coronavirus or they've been diagnosed or they're having symptoms, they are entitled to 2 weeks or 80 hours if they're full-time, and prorated if they're part-time. They're entitled to 2 weeks of paid leave. As a result of that, they would get 100% of whatever their regular pay is today. And the employer, here's something new, the employer gets a refundable tax credit to offset the cost of those wages that they paid that sick employee. So 100% of those wages can be offset. There is a cap. The cap on wages in the next column for that tax credit is $511 per day and $5,111 in the aggregate, plus a pro rata amount of expenses for maintaining this plan. So in typical tax language, this gets complicated fast. The takeaway is that there is a credit, and it's $511, up to $511 per day for individuals. And again, where this is like, given that we haven't seen a lot of cases at this point in Pennsylvania, what's more probably going to qualify someone to take advantage of this would be that, giving care to a child whose school is closed. If you're caring for a family member, just to go down to the next row on this chart, 2/3 pay is what you're required to get, and the employer credit is no longer as much. It's only $200 per day max. How do you get this money? The way you get it, note in the far right column, the refundable tax credit, it's actually an offset to your employer payroll tax return. So when you're filing your quarterly payroll, typically you would be remitting taxes and you would then get a credit. What's really interesting, remember, this is in the second act that we're talking about. When we were talking about the third act in the Senate, they're saying you don't need to pay your employer taxes until October. Or sorry, no, I'm confusing myself. You don't need to pay your employer taxes until 50% December of 21 and 50% December of 22. As a result, you can get a refund when you file your payroll taxes potentially in order to get these credits. I'm going to move on to our next slide here. The paid family leave, this is similar. This is where you really need to be careful about the version of law that you're looking at, because this criteria changed. The only criteria that qualifies you under this section is for providing childcare for a child under 18 whose school or daycare has closed. That's what gets you to eligibility for family leave, and that paid leave could be up to 12 weeks in total. And you guys can read that chart. And again, this is a handout that we sent out that you can look at. I want to quickly jump to one other. There's an IRS notice 2020-15. This is for high deductible plans. You may recall that now any kind of COVID, coronavirus, whatever terminology you want to use, any of that must be provided for free. It's not subject to any deductibles or any copays or any of the sort, in an effort to encourage people to do the testing as necessary. That does not blow your high deductible health plan, and that's what this notice references. This next slide talks about Section 139. This is not new law. This is in the Internal Revenue Code, and it relates to disaster relief payments. It's not something we typically see terribly frequently, but now that our entire country is in a state of emergency as declared a qualified disaster by President Trump, this is something that employers are going to want to think about. As you're outfitting your employees to work remotely, work from their home, you may be paying for internet, you might be providing some kind of meals or various forms of monetary value that typically would be taxable to that individual, and it would be part of their payroll. Because of the situation we're in now, this would be deemed to be a qualified disaster relief payment, and it means that it's not taxable to the recipient. And so it could be for personal, family, living, or funeral expenses incurred. And it's pretty broad in its definition, but the key takeaway here, I would say, is keep documentation. You want to make sure that you're keeping good records on what this is. And with that, we're going to switch to having a polling question. Again, Adam outlined at the beginning of the presentation, we're going to be having a few polling questions throughout this session. So that'll be popping up here on your screen in just a moment. What I'd like to do then is turn it over to Stephane Smith. Stephane is in our consulting group, and Stephane will be talking about she's in our HR consulting group, and so she'll be talking about some of the things you need to be aware of related to this second act, as well as unemployment. So on the polling question, if you want to take a look here, by the way, we didn't go terribly technical on these questions. This is just to make sure you guys have a pulse and that you're with us. And by doing so, you'll get CPE. What roles are you currently playing in your life or business? Lead problem solver, chief communicator, logistics expert, or child caretaker and entertainment coordinator. And you're welcome to select all that apply. And if you would simply want to do that, we will monitor the results here and we'll give you a little bit of time to finish that out. We'll give you about 10 seconds. So again, if you guys are taking a break at the moment, you're going to want to run back to your computer, hop in here, make sure you vote on this. We'll have 2 additional questions coming up later in this presentation that you'll want to be sure to respond to in order to get your hour of CPE credit. And with that, I'm going to turn it over to Steph, and she will take us away. Thank you.
Good morning. Thank you, Eric. When an event like this happens, we are forced to take a hard look at our current practices, and we realize in the midst of it all, we weren't as prepared as we thought we were. Nonetheless, it's not too late to start. Perhaps now is not the time to begin developing a plan while trying to keep your business running and navigating the daily developments. However, it is a good time to jot down notes as you go. Keep track of what you had to figure out in a pinch. What are you missing? What did you wish you had organized? Then when we get to the point of relief, you can conduct a debrief meeting with your key staff and review what went well. What could you have done better? Determine what you need to do differently in order to position your organization for the next emergency situation. I'll try to advance the slide here. There we go. Assessing where your business is most vulnerable to disruption for some is a current work in progress, where we're all finding ourselves trying to figure it out as we go. This chart is an illustration of levels of impact and is outlined in order of escalation. In the following slides, I will provide some topics for consideration for either the immediate or short-term and long-term plan development, as well as address some of the common questions that have been coming across our desks lately. Preparing your business for a threat requires a well thought out action plan. Some areas to consider as you work through developing your plan is to think through who should be on our response team. Do they have laptops in order to work remotely if necessary? Who will be responsible for internal and external communications to maintain consistent messaging? What critical information and documents are necessary for continued business operations? Create a business continuity plan. How will you handle payroll? Do you have cloud-based payroll solution that allows you to process payroll remotely? If you do not, perhaps that's something that you want to consider looking into in the future. What are the key business functions that are multiple employees cross-trained in the event of emergency or an unexpected absence? Consider alternate work options for your workforce, such as telecommuting and flexible or staggered work shifts. Do you need to develop a temporary telecommute policy? Is your business in a position to allow for remote work capabilities? Who on your workforce can and should work remotely? And do they have the resources in order to work remote? Assess your VPN bandwidth. Do you have enough software licenses to support remote work? And how will you handle data security and confidentiality? Timekeeping considerations, and how will you document overtime? Remain connected to your remote employees. Supervisors should have increased touch points with their team. Do you have all websites and passwords that you need to access key sites and information systems? Is your employee handbook and company policies and procedures current? These are the go-to documents in times of emergencies and uncertainty. Make sure that those documents truly reflect your current policies and procedures so you don't misguide and confuse your employees. What are the critical elements to your essential business functions? Do you have copies of your vendor agreements, insurance policies? Do you keep them in a secure and accessible location? Make sure that you understand those agreements and policies, and are there financial relief options within those? Make sure that you review your workplace safety precautions and that your employees know what to do in case of an emergency. And during the business continuity planning process, unionized employers should review their collective bargaining agreements to determine whether special provisions have been made in the event of a disruption or business operation. Now that I've given you some things to consider with regard to planning, I'd like to address some of the questions that we've been receiving. I'd like to note that this is not an all-inclusive list. Unfortunately, we don't have enough time to address each of them, but I am addressing those that we've been receiving most frequently. Can employees be asked to notify their employer if they've come in contact with someone who has coronavirus? Yes, you may request that you are notified if they have been in direct contact with someone who has tested positive for coronavirus. You should direct the employee to the CDC's guidance for how to conduct their own risk assessment of their potential exposure to assess their own risk level. What if I have an employee whose health is being monitored? If you have an employee who tested positive for coronavirus, you should inform your employees and, if possible, clients or customers immediately of the possible exposure in the workplace. However, you must maintain confidentiality. You may not disclose the employee's name. Even if the employee grants permission, it's not good practice. It's good practice to remain confidential. Does an employee suspected to be exposed to coronavirus at their work qualify for workers' compensation? If an employee believes that they were exposed in the workplace, they may be eligible for workers' comp. There are certain occupations that have a heightened rate of contraction as compared to the general population. For example, EMTs, paramedics, nurses, firefighters, doctors, those who work in environments with which exposure to some high risk of certain ailments include illness caused by these several factors. However, the burden of proof is on an employee to prove that they contacted at work. They may file a claim, but there is no guarantee that they will receive the benefit. What if an employee comes to work and states that they feel ill and we send them home? Is the employer paying for the employee for the day? You want to make sure that you're abiding by the Fair Labor Standards Act. If you are required to pay your exempt employees their regular pay. If the employee is a non-exempt employee, you will only pay for actual hours worked. If an employee is currently on FMLA, is there an impact on the existing leave specific to the emergency FMLA? If you have an employee that is currently out on FMLA and is unrelated for the reason of the Emergency Family Medical Leave Act, this does not apply. They would continue the unpaid job protective leave under their current circumstances. Employees are one of the most important assets to your business. They're critical to daily operations and how your customers feel about your company. In times of emergencies and uncertainty, your employees can play a critical role that can protect not only their lives, but also your customers. Regretfully, though, there are times when we are faced to make difficult decisions that have a significant impact on your business and your workforce. The following slides will review some unemployment compensation benefit highlights for those who are in a position of having to make some difficult decisions, either presently or possibly in the future. What if I have to furlough or lay off some of my employees? Employees may qualify for unemployment. In light of the coronavirus situation, there have been temporary adjustments such as waiting week has been suspended, which means they will receive pay for the first week of unemployment. Additionally, the requirements for work registration and work search have been temporarily suspended. The fastest and easiest way for your employees to obtain unemployment compensation is to file by going online. The difference between a furlough and a layoff is a furlough is temporary with the intent to bring the employee back after a period of time. Generally, the employer can continue to provide employee benefits during that time as well. A layoff typically is permanent with no intention of bringing the employee back by a particular period of time. Not to say that you can't lay off an employee and bring them back later, you may. Under the WARN Act, generally employers with 100 or more full-time employees who implement a plant closing or a mass layoff must provide at least 60 calendar days advance notice to employees affected. However, employees may not have to provide the WARN notice if they can show that the layoff or closure is due to unforeseeable business circumstances, which can include an unforeseen dramatic major economic downturn. It is possible that the effect of the coronavirus could create such circumstances. Are employees eligible for unemployment if they are quarantined due to coronavirus? Yes, they may be eligible for unemployment compensation if they are employed full-time or part-time and have been directed by a healthcare provider, medical professional, or public official to isolate or quarantine. Employees may be eligible for unemployment due to a reduction in work hours because of the coronavirus if they are employed by a school that has been ordered to close by the government and they no longer are receiving any type of pay. Employees, however, do not qualify for unemployment compensation if they are forced to stay home due to school or childcare closure, or if they are told not to report to work in order to prevent the spread of an illness or reduce the risk of coming in contact with the virus. So before I pass the baton to Ryan and we move into a polling question, I just want to take a moment to touch on self-care. Fear and uncertainty triggers many emotions. With government quarantine mandates, we are limited to where we can go and who we can interact with, and that also weighs on our mental and physical health. Stress can weaken the body's ability to fight infection, and it's important now more than ever that we do what we can to manage that stress in order to remain healthy. So how can you manage stress and anxiety as well as help those around you? Take a break from the news. Consider limiting how often you expose yourself to the barrage of information. Take time to breathe, meditate, practice yoga poses, stretch, or listen to some calming music for a few minutes. Maintain healthy eating habits, which I find is kind of challenging at this time being at home. Exercise regularly when possible. Take time to go outside each day for some fresh air. Make sure you're getting plenty of sleep. Schedule time to unwind. Working from home can cause people to work harder and longer than they usually do. Schedule your day, and when it's time to be done with work, make sure that you stop. Allow yourself the break and the time to recharge. Maintain connection with others. You may need to stand outside, maintaining social distance to talk to your friends or neighbors, or make a phone call to your loved ones. Use FaceTime when possible. Talk about your concerns and share your feelings so you don't keep them bottled up inside. If you are feeling overwhelmed by the stress and it's beginning to impact your daily activities, please call your healthcare provider for additional help. And on that note, we're going to take a moment for a polling question before we transition to Ryan to review the financing and loan options available.
And the second polling question will be posted here in a moment. As a reminder, to receive CPE, you must answer all 3 polling questions. And here comes our second polling question. The question should be available on your screen right now. And the question is, what are your current top concerns for your team?
I cannot see it, Adam.
Yep, I have a couple people telling me they can't see the question, so I'm actually going to try this again. So hold on one moment. end it, and I'm going to relaunch to see if that does anything different.
There we go.
There we go. Thank you. Still there?
Yes.
Okay, awesome. Thank you.
Well, good morning, everybody. This is Ryan Hurst from RKL's Business Consulting Group. Like Eric and Stephanie, please also forgive me for any background disruptions on my end, courtesy of my 3- and 6-year-old colleagues. Earlier they were having an indoor scooter race around the house, and they're certainly putting my wife to the test. Well, why don't we give the polling question another few seconds for folks to respond, and then we'll get started in the final section of the presentation today.
And I apologize, you can only select one option. I know it does say select all that apply, but only one option is available for this question. Apologies.
Okay, so I'm going to take the next few minutes to just talk a little bit about some financing options for folks that are concerned, like most of us are, with what is the impact of COVID-19 going to have on our businesses. Fundamental questions I'm sure many of you have are, things like, how do I meet my payroll and how do I pay my vendors? Which just a few weeks ago, I don't think anybody or very few people were having to ask themselves those questions. So this has hit us all in a hurry, and it's forcing us to really reassess some of the fundamentals on how we operate. These are hopefully all short-term obstacles, but are certainly critically important in the times that we are in. I'd like to take the next few minutes to summarize a few of the emergency type financing options. Note that none of these are perfect for every situation. We don't have one specific plan that we can say this is the one to go with and this is the one we endorse. There's also, apart from these, potentially more options that are being explored, particularly a number at the local levels and within some industry groups. So certainly do your own research, and we'll continue to keep everyone informed as we learn more as things continue to evolve. Also, we've omitted lots of details from this presentation, and some of these options are changing as the rules continue to be written. The first one, and Adam, somehow this slide has gotten away from me. Can you back it up to the first slide for me? Thank you. The first option in the left column is one that most of you would be pretty familiar with. Business line of credit. Nothing special, nothing unique to this emergency situation that we're in, but it's a resource that hopefully most of you already have access to. Many of you, we know from within our client base, a lot of our clients have not really been tapping these, or certainly not tapping them extensively over the last few years. But a lot of clients do have them for either working capital needs or rainy day, and it is absolutely downpouring out there right now as it relates to the economic climate. So if you have a line of credit in place, to me, it's your first option. Maybe not the cheapest option, or at least as cheap as some of the other options that will be presented later on, but certainly the most available option to most of you. If you do not have a line of credit in place, a recommendation would be to start exploring that now. It is something that banks are still continuing to lend, at least for the time being. The big note there is that it is, like any situation, it's based on the credit worthiness of the borrower. The one I want to spend a little bit more time on, and it's been prevalent in the news of late. It's the SBA Economic Injury Disaster Loan, EIDL. This is the $50 billion program that President Trump had referenced last week for infusion of capital into small businesses. The important first step in that process is that state governments are ultimately apply and are accepted by the SBA as a declared disaster area. As of about 10 o'clock this morning, 29 states and the District of Columbia were declared disaster areas. And finally, I think it was as of yesterday, Pennsylvania joined the club, along with New Jersey, Delaware, and Maryland. All four of those states, among others, have disasters declared, which means that small businesses are eligible to apply for this funding. The loan sizes for the SBA EIDL are up to $2 million. These are applied to both small businesses as well as not-for-profits. Both are eligible. One caveat to that with respect to small businesses, the small businesses are not eligible if they have access to other sources of credit. So anybody on this phone that, say, has a line of credit already that has, at least in my opinion, would have available capacity on it, remains to be seen exactly what disqualifies. But if you have available capacity on your line, I would think that that would disqualify you from accessing this type of funding. Just a note on what a small business means by SBA standards. It's determined based on total employees or revenue. That the employee counts are 1,500 employees for some industries, 1,000 employees. If you have 1,000 or less employees, that captures about 80% of the industries based on employee count. And revenue can be up to $41.5 million, depending on your company's industry. About 80% of the industries actually fall under the $30 million threshold. So if you're under $30 million, if you're in 80% of the industries that the SBA classifies, you're probably good. There are some levels that are a little bit higher, and just know that about 12% of the industries are at the $41.5 million level. So, you know, when you hear small business, it's important to understand that that does not necessarily exclude businesses that are not, you know, the Main Street type businesses. I mean, small it can be a little bit larger than what some of us might necessarily think it is. The advantage of this loan is that the rates are better than most lines of credit. The challenge is that the timing may be restricted. Traditionally, disaster loans, not related to COVID-19, but this economic injury disaster loan in a traditional sense takes it's about a 3 to 4 week process in total from application to funding. And then $25,000 can be released as an initial funding. So you don't really get a whole lot of money in the short term. And then the remainder of the funding occurs over time, over the next few months. We haven't really seen yet whether this process is going to look a little bit different, whether the terms are going to be looking a little bit different. We do know that the SBA is trying to expedite the process because we know that this is, you know, this is a here and now pressing issue. But, you know, we're not sure exactly where that's going to go. And, you know, the other thing with that is that they are undoubtedly going to be overwhelmed with the amount of loan applications on that front. So our recommendation on this is if you think you may need it, get your application in now. I was just on the website during this call. I couldn't even get on. That's how much demand I suppose there is for this, because I think the website is probably overwhelmed. But get your application on this funding now. You can always turn it down later. You're not signing up to be required or obligated to use it. And just note that, as it's shown on the slide, this is done directly through the SBA's website. The third option on this slide is the SBA Express loan. This is a traditional SBA loan. This is not disaster specific, although you could use it in a disaster related activity such as what is going on right now. The nice thing about this one is that you'll have approval or what you'll be turned down in the course of 3 days. So you'll have an answer in the very short term, but traditionally funding can take up to 3 months. So if that's going to be the timeline here, that's not going to do a lot of businesses a whole lot of good if they're questioning whether they're going to be able to meet a March or an April payroll. These loans also go up to about $350,000. So we're not talking a material amount here. These are not going to be able to solve the problems indefinitely for a lot of businesses, but it is a way to at least tap into something in the short term and at least have a response pretty quickly. Note that these can be structured as either a term loan or a line of credit. Also note, as you see on the slide, the rates here are a lot higher than what a traditional line of credit would be, and especially compared to the EIDL. For these you actually go through your certified development company or in a bank that is located in your area. And note that all of these have application processes and require submission of information as part of that application process. So looking at Pennsylvania, there are a few potential programs that have been mentioned in the news over the last few days. I'll touch on each of them, but one observation I'm sure many of you can make just by looking at the slide. Compared to the last slide, it's a lot less dense in terms of information, and there are a number of blanks in some of these slots. That's a sign of what we really know at this point about these programs. The first one was led by Senator Tom Killian. It was proposed in a memo to other state senators on Monday. Legislation was supposed to be forthcoming. This one was a redirection of game table revenue to the Pennsylvania Department of Commerce and Economic Development to generate $125 million of relief to small businesses. We didn't know loan size. Interest rates were slated to be 0%, so that's certainly a benefit. Don't really know anything about the process or requirements or anything like that. And the big thing is that we haven't had any updates since that initial announcement on Monday. And that just this morning, I saw news that Senator Killian and Representative Chris Quinn are co-sponsoring a COVID-19 education bill. So it might demonstrate that their focus is now elsewhere. The second Pennsylvania program is led by Senator Joe Scarnati, and this was announced on Wednesday. This calls for $60 million of funding through the Pennsylvania Industrial Development Authority. Loans would be up to $100,000 in loan size for businesses with 100 full-time employees or fewer. These are targeting 0 interest rates, no application fees, no payments during the first year, which is nice. So even though it's not a large loan amount, you still have you still have the ability to to not pay for the time being. This one is targeting a launch of next week, and from what I've seen on this appears to be the lead horse as far as state level funding. The third option or third situation that was announced was the Gatos-Solomon, which is an idea proposed Wednesday by Representatives Valerie Gatos and Jared Solomon. Legislation was supposed to be forthcoming. I haven't seen anything as of yet. These are supposed to be low to no interest rate loans with 2 types of loan structures available. Both short-term funding to meet payroll and overhead expenses, and a second loan type for long-term resiliency to help businesses recover over time. We haven't seen any updates since the initial announcement on Wednesday. Not sure if this will be competing in addition to, or whatever the case may be, related to Scarnati and Killian. Just a few last takeaways on this slide. We really don't know a whole lot here yet. We don't know the processes, the credit requirements that may or may not be placed into force. We don't really know a whole lot about loan structures, eligibility, loan amounts, as well as what the application process even looks like at this point. And lastly, as with any loan, and this applies to these Pennsylvania programs, as well as any other financing, traditional SBA or otherwise, be sure to understand all the terms and ramifications you're getting into, especially any requirement related to a personal guarantee. You certainly don't want to, throw up a Hail Mary and realize that ultimately that came to bite you personally if that does not work out. The last slide relates to other options and considerations. This one really isn't financing related per se. It's more in terms of cash flow, cash conservation, those types of things. So they kind of fit within the same box, but not the exact same thing. Keep in mind that there's also personal funding options outside of the business. So if you have personal savings, investments, those sorts of things, or you have access to personal credit, so your credit cards, a home equity line of credit, other forms of individual line of credits, those are resources. Certainly make sure that it fits within your overall plan and make sure that you understand what you're getting into from a risk perspective, but those at least are some alternatives. Be sure to, if you have business interruption insurance, be sure to check in with your insurance agent to see whether COVID-19 is a covered event. So to the extent your business is being forced to be shut down, depending on the terms, this may be something that would qualify. Also, certainly look into ways that you could conserve cash. You can at least try to delay some payments, prioritizing those for critical vendors and whatnot, and then also looking for those that maybe aren't deemed as critical. See if you can at least extend them out a little bit. Also, you don't necessarily always have to pay your invoices the moment you receive them. So, if that's been your normal practice, maybe, consider taking a step back from that practice. Of course, there are last resorts available. These are certainly not recommended, except, in the case where they're strongly evaluated and it's just a matter of that or shutting down completely. Divestitures or sale of say a product line or a certain division of a business, something you do, considering closing something that's been unprofitable and you haven't necessarily been able to warrant that all along. Layoffs, furloughs, as well as a distressed sale are all options that can be on the table. However, those are ones that we certainly wouldn't recommend as primary options, but at least wanted to present them to you here today. Adam, can you bring up the final polling question then, please?
Hi, Ryan, I can. Give me one moment, please. And here's our polling question number 3 should be launched. If somebody, Ryan, you can tell me if you can see it on the screen.
I can see it. So this polling question is, how are you taking care of yourself? Select all that apply. Exercising regularly, getting a good night's sleep, staying connected with friends and family, and taking regular breaks. We'll take a few seconds and then we'll wrap things up. So while you're answering that, we have the last couple slides. One of them is, how can my advisors help me? It's really important to remember here that you're not alone. You don't have to go it alone. Rely on your advisors. Here at RKL, you can see some of the breadth of capabilities that we have just on this phone call. We have the traditional tax side, and then on our consulting side of the group, financing, understanding, crisis management, Stephanie from the human capital management, human resources side of the firm, folks that haven't been a part of the call today, in wealth management, cybersecurity, risk management, information technology. It's a long list of people that are all hooked in and all ready to help outside of our organization, and we can be either a gateway to them, or many of you already have these relationships. Remember, attorneys, bankers, insurance agents, the Small Business Administration, economic development centers. There's probably several that we're leaving off the list. make sure that you look at these as an option to stay in touch with and consult with in times where you're making very critical decisions in times of immense amount of stress. So, rely on your advisor team and certainly reach out to us at RKL as you have any questions or concerns along the way. Lastly, thank you all for participating in our webinar today. The last slide has Eric's, Stephane's, and my contact information, and also stay abreast at rklcpa.com for more resources and updates as things evolve. Thank you all for joining us.
Thanks, Ryan. And at this time, we're going to conclude today's call. Thanks to everyone who joined us for today.